What is up and welcome back to another video on high altitude investing. My name is Dallin Anderson. Today we're going to be learning about how to trade double top patterns. This pattern appears a lot in the markets. This is a really good way to avoid losses and get out of the markets before everybody else does. So we're going to learn about how to identify double tops, how to play this pattern effectively. So without further ado, we'll get straight into today's video. So we're looking at this double top pattern here on Ethereum today. First example, and this is actually a really good example of a double top pattern. You can see prices went up to about 4,800 per coin and rejected. It came down to a major support area right here and bounced back up to 4,700, actually just under 4,800 per Ethereum. Then you can see it rejected a second time. And when it came back down the second time, that's when prices felled that support level right here. And after it felled that major support level and topped twice, or in other words, a double top, then it gave the bears permission to really take this quite a bit lower. So if you have a view on what way the market's going to go, you might miss some of these trading patterns. That does happen even to the best investors and traders. So keep that in mind when you're looking for these patterns. But this double top pattern is a really effective trading pattern. It's one of the ones that professionals use all around the world to trade and invest in not only crypto, but the stock market as well. So let's go ahead and check that out, because if you look at the IXIC, it's actually pretty incredible how the exact same thing happened on the stock market. You can see a major resistance level right here. Prices come back down to support. They form a support level, they bounce back up, and it tries to go above that level, but it fails to do so. So we have a top right here, a top right here. Prices go back down to that major support level, and we drop right through. And you can see that gave the bears permission to push the price lower. So we have two really good examples here of a double top pattern on Ethereum as well as the stock market. You can see how effective this trading pattern is. The other pattern that's equally as effective and useful is the double bottom pattern, but that's a whole video in itself. So if you guys want to learn about double bottom patterns, I've talked about them in the past, then let me know in the comments below and we could do a video about that as well. But you can see price goes down to major support, bounces back up, hits resistance, comes back down to support. It fails to break below that support level, goes back up through and pushes through this level right here. And once it gets through that level, you can see it gave the bulls permission to take charge of the market again. So this is a very effective trading pattern. Trading patterns are very useful to understand. In general, they're found everywhere, even right here on the NASDAQ, this is the NASDAQ, not the S&P 500. On the NASDAQ Composite Index, you can see that there's a bullish flag pattern. So when price broke above this resistance level, that confirmed the breakout of this bullish flag pattern. That is a very, very, very effective trading pattern. The bullish flag pattern and bearish flag pattern are used among professional traders all around the world every single day in every single time frame to make money consistently, effectively, while avoiding losses and risk inside of these markets. So I really love trading patterns. So let's go back over to Ethereum and look at another example of a double top pattern. So we looked at the double top that happened back here in 2021. Now let's look at the double top pattern that actually occurred back here in 2018. So in 2018, price goes all the way up to 1,400 per Ethereum, and then down all the way down to about 750. It finds a support level right here. It bounces back up. So we have our first top right here, bounces back up all the way to $1,200 per Ethereum. It rejects that second time off of resistance, goes back down to this major support level and breaks down below. And you can see that that double top led to a very large decline over time inside of Ethereum back here in 2018. So understanding these trading patterns is very helpful. And really, if you want to learn the patterns, first of all, check my ebook in the description box below. But if you type in a double bottom pattern into Google or your favorite search engine, or a double top pattern, you're going to find a lot of different examples of these patterns, both real examples in real markets, as well as just the simplified version of these patterns that people create, like little charts and graphs to help people be able to identify these patterns. But the double bottom pattern and the double top pattern are both very, very high probability patterns. In other words, you're not just gambling your money, you're betting with a high statistical probability in your favor, as well as the ability to set a stop loss so that you cut your losses and avoid any risk of losing money in these markets, or at least you cut your loss very low. So it's only like a 3 to 5% loss. And when your winners are 30%, 50%, 100% gains, taking a 3 to 5% loss is really not a big deal if you're making a lot of 30%, 50% trades. So the bull flag pattern that we were looking at earlier on the IXIC, this is a really good example of a bullish pattern that takes off and really can accelerate a market into prices that are insane. So the stock market's looking really bullish. And if you guys don't know, the cryptocurrency markets do have a 90% correlation to the stock market. So as the stock market is breaking out here, that's really good for the crypto markets as a whole. So I know today's video is about double tops, but really it's useful to understand the context of these patterns as a whole, because we also have a double bottom occurring here on Ethereum. And you can see that we've hit this low, and then we've bounced back up. We've hit this low again. We failed to drop below that, so it became support. And we pushed up, and we're actually breaking up through this resistance level. So this is the opposite version of what happened at the top of the market. It's the opposite version. It's the bullish version that leads to more upside, as opposed to the bearish version that led to this big crash here in the short term on Ethereum. So you can see how using these trading patterns are very useful. And what's really cool is you can invert the chart. So if you click on the chart and press invert, look how that double bottom pattern now looks exactly like that double top that we were looking at earlier. So you can see how these patterns are the same thing. They're just flipped inverse. Whether it's a double top, a double bottom, you can learn how to identify these patterns and position yourself along with the whales, because once there's a double top, that's how you know that the money has shifted from bullish to bearish. And once there's a double bottom like this, which will invert back because we had it flipped upside down, this is when the money goes from the bears into the bulls. So the momentum shifts. So these reversal patterns are extremely useful. Definitely something that every trader should have under their belt and in their trading tool bag, because these patterns consistently used have made millionaires. A lot of them. I know, because I'm one of them. I made $1 million by the time I was 21 years old, investing and trading in the cryptocurrency markets with patterns, with Elliott waves. So these patterns work, you guys. The same tools that professionals use all around the world. So we're going to keep learning about these patterns so long as you guys want me to make videos like this. Comment below if you do. There's Elliott wave patterns. There's all kinds of different patterns that you guys can learn about how to play. But the main thing for these double top patterns is you want to identify the first point of major resistance, which is very, very typically identified by a huge selling candle, you can see. So once prices hit a resistance level like this, come down to support, bounce back up to that resistance, then you can identify that double top. But it has to break below the support again before it confirms the downward move. So you can't just see price go up to resistance, drop hard, bounce up, drop hard, and then just automatically assume it's going to go lower. It could find support again and go up higher, right? But if it fails that support, it confirms the pattern. So that's when you take the trade. And that's when a lot of people will take a trading plan and say, you know what? If prices go above this level, I'm going to take my loss if they're shorting, for example. And then they have this really tight stop loss where they basically lose nothing, or they do lose nothing if it doesn't go in their favor. And then if it does go in their favor, they get a 50%, 30% huge swing in the market and make a ton of money. So that's the way they do that with the double top. And of course, that psychology can be applied to every single trading pattern. You can take this trading plan tool over here on TradingView, short, for example, because this is a double top. Well, actually, it'll be easier to understand from the perspective of buying, because it's usually easier for beginner investors to understand buying, but we'll go to shorting right after to show the double top. But let's look at this double bottom, okay? We have this double bottom pattern right here. We break above that double bottom pattern. That's what we're doing right now. So if you take this bullish trading pattern tool, plan tool, and you place it, let's say you wait for price to drop down. I'm not saying it's going to, but let's just say your entry is at 2100 per Ethereum, okay? You set a buy order at 2100. And then over the next couple days, prices drop down to 2100, okay? Look what you can do. You can set a stop loss at like 5% to 10%. And if you're wrong, you only lose 5 to 10% of whatever money you put into your trade. And if you're right, you win 43 to 30%, or even more. You'd want to pick a target and everything. But let's just, for the sake of this video, let's do a 43%, right? So you've got an entry price right here. You've got a stop loss. If prices don't go in your favor, it drops down, you get stopped out, you barely lose anything. If it does go in your favor, prices go all the way up, and you make this huge gain, 43%. And if your trading pattern, let's say, has a pretty high statistical success rate, and you're barely losing anything when you lose, and you're making a lot when you win, you can see how professionals are able to extract billions of dollars trading swings, as well as big picture investing cycles like we do, out of these markets, because they understand loss aversion, risk management, and capital preservation. So these tools are really useful. If you can figure out where to enter, where you've got a trading pattern in your favor, this double bottom trading pattern has a very, very high statistical probability. So in other words, like I said, if you guys are taking trades with low stop losses, small stop losses, you're barely losing anything. So in other words, it's really easy to be able to find setups where there's virtually no risk and a really high reward. This is called risk to reward ratio, and it's part of risk management in general. So that's really useful to understand. So yeah, that's how a professional would trade these. They wait for the breakout because the pattern is not confirmed till it actually breaks that resistance, like we just had happen with Ethereum here. And that resistance breakout confirms the pattern. There's so many patterns you guys can learn about. There's also a cup and handle pattern. And the cup and handle is a very effective trading pattern. You can see that's what this is also showing, a cup and handle here on Ethereum. So there's all kinds of patterns going on here with Ethereum, with really, really high upward targets and very, very low risk downside. So that's what risk to reward is. This is how professionals trade these patterns. You don't have to do this if you're just investing. Sometimes knowing what patterns are going on in the market is just useful as an investor, just so you can say, oh, it looks like it's probably going to keep going higher. Even if you're not trading the swings, you're just investing, still useful to know these trading patterns. So if we look here on Ethereum, the same thing. We've got the support level right here. We've got resistance. We reject. Once we fail support, that confirms that it's time to short. So this is if you were to play the market shorting instead of buying. You can put an entry in with a really low stop loss, like I said, 5 to 10%. And then look at your potential profits, 43%. It actually went all the way down to 76% from that double top entry point. But still, some people like to play a little safe. They might have only set like a 30% gain, but that's amazing. That's an amazing trading setup just because of the double top pattern. So yeah, you guys, those are double tops and a little bit about some of the other trading patterns. If you found this useful, please let me know so I can do more trading pattern videos in the future. Hey, thank you so much for tuning in to today's video. I hope that you enjoyed it. Please click the link in the description below to check out the website. There's also a free Discord and a link to the ebook. That ebook is completely free. It's full of super useful information to get you started trading and investing in the cryptocurrency markets. So thank you again for tuning in, and I look forward to seeing you in future videos. As always, stay profitable out there.